The crypto community is officially fighting back, with a new bill being put into motion just yesterday that could remove Gary G from his throne of abuse. On top of this amazing news, we have more crypto positivity with the Hinman Documents coming to light today with the XRP SEC lawsuit. And to finally add the cherry on top, we also had the CPI data come out this morning, signaling what the Fed might do next and what the markets will do in anticipation. But even though all this good news is coming out for the crypto markets, the overall financial markets are still looking poised for another ugly drop coming. So I think we need to start with the most important news that everyone's been talking about, the SEC Stabilization Act. Basically, Warren Davidson put out an act or a bill where he wants to restructure the entire SEC. Basically, the old structure is Gary Gensler's at top, and he's in charge of everything. He's controlling the whole SEC and all the lawsuits that are coming out in the crypto market. The new structure would kind of be a reverse, where you have 6 commissioners, 3 Republican, 3 Democrat, and then you have your executive director who's kind of listening to them and their plans. Now, the biggest thing that he says is that he wants to depoliticize the world's biggest and best capital markets. It should be unifying and nonpartisan plan to restore the focus in the mission. And I think this is an amazing act, and the crypto community has been getting behind it with the hashtags #FireGaryGensler. Again, you can see in this Cointelegraph article, the U.S. capital markets must be protected from tyrannical chairmen, including the current one, SEC head Gary Gensler. Now, while this act is basically a general reorganization of the SEC, or that's kind of the plan, the main thing that we're trying to get here, or what Warren Davidson is trying to get here, is he's just trying to get Gary Gensler out of the chair as the head of the SEC. And he says in a quote, "That's why I'm introducing legislation to fix the ongoing abuse of power and ensure protection that is the best interest of the markets for years to come. It's time for real reform and to fire Gary Gensler as chair of the SEC." Now, on top of all of this news, including the crypto markets and the SEC, the Hinman Documents have been released today. Now, the Hinman Documents are from 2018, when the former SEC director, William Hinman, when they accused XRP of being a security all the way back in 2018, those documents are finally coming out 5 years later. Now, while a lot of people thought this was going to be XRP's big break, it really didn't do too much to XRP, but it did help out in the overall crypto fight against the SEC and Gary Gensler. The biggest takeaways that you can take from this press release, or basically this email release, is that there wasn't a big impact on XRP, a decently positive impact for Ethereum, and a nuance puts Gensler in a corner because of how he wants to label everything as a security. It's going to push him back into a corner. And thankfully, some good news will come out of this. This is going to happen as of recording this video. When this video does come out, this press release will already happen, but we'll cover it in tomorrow's video. There is a hearing notice, and it's the future of digital assets, providing clarity for the digital asset ecosystem. It's happening today at 2 p.m., and it's basically where a lot of the politicians are going to be talking about where the future of crypto and digital assets are going to be going. So tomorrow we'll cover a lot of what's going on and all the snippets that come out from this. And to transition a little more into the price analysis of Bitcoin and the whole crypto markets, we have to remember that we are currently in a crypto winter, and we're a year away from the halving. Over the past, since the existence of Bitcoin, these have not been good times in terms of price of Bitcoin. And the reason is because a lot of attention gets pulled away, the price isn't doing so well, and people lose interest. And then the Bitcoin halving happens, and then price rockets. And as you can see, we are only 320 days away, and the cycle peaks, bottoms, we consolidate, and then the halving happens again, and then we repeat that cycle. Hopefully you could see it a little bit better in this picture. Each halving, after the halving happens, we have a massive boom in terms of Bitcoin's price. And what happens right before the halving is that we have some type of a downturn or consolidation happening for basically a year and a half before the halving happens. And if we take a deep dive into Bitcoin's price and where it's sitting right now, this blue line represents when the Bitcoin halving is supposed to happen. It's supposed to happen on April 26th of 2024. Currently, this blue bar says that we're 315 days away, basically a little less than a year. So this blue bar, or at least this area right here, is where I kind of predict Bitcoin's price to float around until we reach the Bitcoin halving. I don't see a lot of price action happening. There's not going to be, big rises. If anything, Bitcoin's price will probably consolidate or even fall back down to these levels. And once we reach the Bitcoin halving, it seems like if history repeats itself, which it usually does, we're going to have somewhat of a boom happen right around here. And hopefully within the next year, we'll have more crypto regulations that are more clear. A lot of this SEC BS is going to pass, and that's going to give the green light for Bitcoin to do its thing every post-halving. But we have to remember one very important thing in terms of Bitcoin's price, the financial markets and the whole crypto market, is what is the Fed going to do? As of right now, US inflation seems to be slowing, and so that's giving the green light for the Fed to somewhat pause or even skip raising rates in June. As you can see, the annual CPI decelerated to 4% in May, and that's the slowest since March of 2021. And you could see all the way over here the peak back in June of 2022 when we had a peak inflation or CPI of 9.1%, and our core CPI was sitting at 5.9%. Ever since June of 2022, we have been falling to basically today, May, almost a year later, where our CPI is sitting at 4% and our core CPI at 5.3%. So this gives the Fed the green light to basically not have to do anything in June, which you could see here. There's a 95% chance, according to this, that the Fed will not raise rates in tomorrow's FOMC meeting. However, that doesn't mean that they're done or they're going to pivot. A lot of people are calling it a skip. So they're not going to raise rates in June. They're going to hold off, see how inflation does. But there is still at least around like a 67% chance that the Fed in July does raise rates and continuously fights inflation. So while this isn't a pivot by the Fed, it's more of a skip. And hopefully by the end of the year, what a lot of people are determining is that we could have somewhat of a rate cut happening in the Q4 or Q1 of 2024. If that happens, that would also be in correlation with the markets going up in value, because if you look back in history over the last 50 years, there typically isn't a bull market until the Fed starts to cut rate. And for many people saying that we've had a 20% rally in the stock market, saying that this could be a new bull market, or if you see those headlines on mass media or news channels, we've had 20% bear rallies before in the dot-com bubble, 1945 to 1949. We've seen it all the time. Basically, what's happening is that we're just getting a bear market rally, but we still have more potential to go to the downside. As you could see here, an analyst by the name of Wilson says that the pause could mark the end of the rally in an ironic twist as liquidity tightens. The reason it's saying it's ironic is because when the Fed is going to pause rates, that's actually the time that maybe the markets could start to fall, which ironically, the opposite should be happening. Now, the strategist says that he expects the S&P 500 to drop another 16% before a sharp recovery in the beginning of 2024. Now, this analyst was also ranked number 1 in last year's institutional investor survey after correctly predicting the sell-off in stocks. So he does have some credibility. But if you look here, the top of the chart is 1945 to 1949, or we had a decline from the peak of around 28%, which is something similar to what we saw right now. In 1947, 1948, right around here, we had a 24% rise from these lows right around here, which is very similar to what's happening right now. Now, in 1949, we had a new bear market low that priced in, or that happened right around here. And so what they're saying is that we could see something very similar where, yes, we have had a 20% rise in the, so to say, bear market, but we could have another drop, creating a new low, maybe falling down to 3,500 in the S&P before the year's over. Now, with all that being said, to wrap up this video, we're seeing a lot of good news coming in the crypto markets. We're fighting the SEC, basically saying that we need the innovation and we need good regulation inside the United States if you want crypto to exist in the US, and we have good people fighting that fight. On top of that, the Hinman Documents provided a little bit of clarity in terms of what is a security and what can be labeled as a security and how. And just kind of the lead up for the rest of 2023, the markets are kind of looking gloomish, right? At best. It really depends on what the Fed's going to do, but it does look like there's a light at the end of the tunnel starting in Q1 or Q2 of 2024, unless we get some insane black swan events that obviously we don't see coming. But that's everything I have for this video. Make sure you tune in tomorrow for updates in the markets. And until then, I'll see you guys then.